The following takes place between 11 a.m. and 12 p.m.
Welcome back. It is the publisher of the Morgan Report. You can get to the Morgan Report. He has a free subscription. And then if you like what you're getting, he has different levels of subscriptions that you can get to, or you can host a radio show and get it as well. David, how you doing?
Doing well, thank you.
David, it's always a pleasure to have you on. I was reading, I think it was something that G. Edward Griffin, a friend of ours, had put out. It was a news article that had come, I think, out of the UK about 10 days ago. It was the manipulation of the gold market by Goldman Sachs and some bullion banks, and had the Fed not intervened, and this is going back 2 or 3 years ago, the bullion banks would have collapsed, and now they think they're back at it again. Are you familiar with that story?
Not that specific one, but I am familiar with a lot of what recently, was reestablished on the internet with this decision that the CFTC made on the silver market manipulation, which basically came out and said that there wasn't anything in their findings that would allow them to, do any prosecution of anybody.
Well, they never prosecute anybody. I mean, they don't even prosecute the bankers when they knowingly launder drug money or rig LIBOR or anything like that.
Amen. That's why I never got really super involved in it. I think it's important that people know what they're up against. And, of course, the question I get continually, in fact, I just got one in this month's several, but one guy in particular, he sounds like he's new, and he said, I'm learning, and we're all learning, by the way. I still learn new things about the silver and gold markets. And he said, it appears that they're allowed to manipulate the market, and this is a fact established by the Gold Antitrust Action Committee, that the Exchange Stabilization Fund that was established about the same time that Roosevelt did all the legislation that turned things around as far as from the constitutional republic to more of a socialistic atmosphere. But regardless of the politics involved, the establishment of this Exchange Stabilization Fund allowed the manipulation of the gold market. And this still is a standing entity. In fact, a very powerful one, a very secretive one, really. It's an open secret. I mean, you can determine that it exists. You certainly can't see what their trades are. So the idea that they can go in and manipulate the gold market at law is an absolute total fact. And so this gentleman wrote me and said, well, if they're allowed to do it at law, what chance do we have? And the answer is we win. And I'm convinced of that. And the reason is that paper doesn't equal physical. And I think that's the most basic thing you can boil it down to. In other words, if there wasn't this big paper market, paper pusher derivatives situation, gold and silver would be far higher than they are right now in terms of paper price. They are at the level that they're at because there is so many derivatives on these markets. Nonetheless, we've already seen an absolute smash you in the face admission that they're losing, and that is when Germany asked for its gold back, and the Federal Reserve of New York said, sure, 7 years from now. So they are out of gold, really. If Germany's gold was in a safe-keeping account, a current account, it will be shipped over to Germany in a matter of just a few days. But no, the New York Fed says 7 years. So it's obvious that they don't have all the gold they purportedly have. Most of it is paper gold. And silver is probably a very similar situation. And so this is the problem. Physical is different than paper, and that fact will always be so. And we're getting, I think, near the end of the game. Now, how long, and of course, that's a question I can't answer. It's going to be next, tomorrow, next week, next month, or next year. I don't know. My best guess is, unfortunately, it's probably got a couple more years. Nonetheless, the price pressure, the upside is continually there, and it will manifest. And again, the overall trend really can't be manipulated by these characters. I know that they smash the price down. I know how they do it. I know when they do it after the fact. I don't know ahead of time, but I know that they're getting ready to. So you can almost determine the ahead of time based on the Commitment of Traders report, but that's another story for another time. Anyway, long-winded, but yes, these entities exist. Yes, they have the power to control the price, and they do, but they can't control the overall trend, which is up. It has been up for over a decade and will continue to do so.
This should be what's taking place this week, the raising of the debt ceiling, which means the creation of more fiat, should be causing the gold and silver to rally. And yet right now we're under a little bit of pressure. But why isn't it rallying? Do you think this is central bank or bullion bank intervention at the moment?
I think the market is just exhausted. I think that psychologically, I think the powers that be have won temporarily. In other words, I think it'd take a huge catalyst, even more than the one you just mentioned, Alan, for the market to really take effect and move to, strongly upward. But that potential exists at all times. I mean, there's all kinds of problems out in the financial system that could cause gold to rally overnight in a up limit fashion. Not predicting that, but certainly it exists. The potential exists. So I think it's just exhausted. It's worn out. I think people, a lot of people have given up and moved on, especially the hot money, the hedge funds, the trading funds, the momentum players. Most of those people have left the gold sector a long time ago. So the people that are left are people that probably don't have much more money to invest or are discouraged and don't want to invest more. And to get new people are followers. They're not leaders. So with gold at $13.30 and silver at $22, it doesn't look that attractive to them because it's not moving. Once they start moving higher, believe it or not, you'll get more participation.
David, why does the media, about the only time they talk about the precious metals is when the precious metals go down? They never seem to talk about it when they're in rally mode.
Well, there's several reasons. I think the primary reason is that gold is the most negatively correlated asset to the financial media, the financial press, and the mainstream financial interests. I mean, it's stocks and bonds. That's what they push. That's what TV shows are about. That's what this, the whole CNBC and a lot of these shows are about. It's about pushing stocks on the people. It's about bonds. It's about currencies. It's about everything that Wall Street has control over. They really don't have a lot of control over gold as far as the actual market itself. Certainly bullion banks, some are on Wall Street. I'm not trying to discount that. What I'm saying is they really don't have any interest in the one asset that proves that there are severe financial problems on a global basis. So the only announcements you get is when gold goes down. You very seldom see them talk much when gold goes up. It's usually when gold is going sideways, has it moved, or is going down, where you get some commentator on there about gold about gold in general. And a few times that I was on when it was going past 1,000, and they kept trying to get me to say that gold's in a bubble. And I said, gold is no way in a bubble. We're in a bond bubble. The bubble, the biggest bubble in the history of mankind, is the bond market. And they cut me off. I was stopped, blank stopped on CNBC. I was blamed on technical difficulties, and I don't think I'll ever be back on that show because I actually told the truth. The truth is the biggest debt bubble that exists in the history of mankind is this debt problem that we have with the United States bond and others, Japanese bonds. It's a debt bubble globally. And that's the bubble. That's the biggest bubble that has ever been witnessed in the financial markets since added phenomenon. It's been from the beginning of time. That's the bubble. But, of course, they don't want to hear that. They wanted me to say that gold's in a bubble. It's gone over 1,000. Well, we're at 1,300 today. Of course, years ago, this was several years ago. But, again, I don't think I'll be back on the program because, they want you to support their view that, stock's good, gold bad.
We're speaking with David Morgan, The Morgan Report. David, it's always a pleasure. Thank you very much, Guy.
My pleasure, Alan. Thank you.
Oh, how could this be? When all this time I've lived vicariously.